Could you please summarize the last year in the life of the Huge Group?
We have had a year of fun, not without challenges, but in challenges fun. We've had an incoming Chief Operating Officer and a new Chief Financial Officer, and one has to manage that process. I'm certainly excited about the future, having the capacity now to deal with a lot of the things that we need to deal with going forward. I think economically South Africa has been in dire straits. I mean, we all know that, and so that has made the general business environment very difficult to deal with. Our customers are predominantly the small medium enterprise customer, and they've suffered. Where we've lost customers, we haven't lost them because of competition. We've lost them because these businesses are going out of business. We've had good revenue gains. So at the top line, good. At the margin level, I'm comfortable. So all in all, I sit back a year later, looking back, going, I've had a good year, and I'm looking forward to the next year.
Good. The one thing you didn't manage to do last year was deliver any significant acquisitions. What was the reason for that?
Well, acquisitions are not an exact science. Often pricing is incorrect, valuations are incorrect. You might find something in a due diligence, and at the end of the day, we didn't come home on two significant acquisitions. It is disappointing. We have a board that have got a very commercial outlook towards things and are trying to do the right things. We want to buy the right asset at the right price. But balanced against that, we've done some smaller ones.
Can you give us a bit of background on what the two smaller ones were and then what the main driver behind that was?
So in the first business combination, we were presented with a company going by the name of Otel, which operates in the voice over IP, internet service provider, data provider space, which is similar to one of our own subsidiary companies, Huge Networks, slightly bigger. And we were approached to potentially invest in Otel. And when we looked at it, we felt it was better if we actually attempted to merge these businesses. Those businesses are going to probably double and a bit our existing business. We've obviously bought more customers and the ability to grow that revenue. These businesses are about scale. What we have done from a risk mitigation perspective is we had a small business dependent on a few people. We have a larger business now that is now managed by a few more people, and so we've diversified risk. And so at that level, the market is going to see revenue growth, it's going to see earnings contributions, and it's going to see at the end of the day a much bigger business. Then we did another deal, which is, in my mind, it is a little gem. PanSmart is a supplier. It's one of the two suppliers of Panasonic PABXs in South Africa. And that company has a route to market and multiple customers. We also have in another section of our business a very big distribution capability. Where we've got over 750 resellers in another of our businesses. And those resellers can now become resellers for this entity that we bought, which is now a subsidiary company of Huge. So they're small transactions, but their contribution going forward is going to be significant.
PABXs is what I'm fascinated because I know the market is by and large moving to the cloud.
Cloud is an interesting concept. It does not mean that there's no infrastructure sitting somewhere. All it is infrastructure controlled by a third party. You can provide services using a third party's infrastructure, or you can do so by using your own. Well, really it all comes down to economics. What's the cost of the infrastructure in the cloud versus what is the cost of the infrastructure at your premises, and a total cost of ownership. So not just the infrastructure, but managing that infrastructure. I think we've got to focus on the economics, and that is why we have bought PanSmart, because PanSmart actually delivers physical infrastructure to site. When you look at the cost of delivering the same solution through the cloud using third-party infrastructure and management, it actually works out more expensive.
How does the lack of 5G spectrum impact Huge, and specifically its FST product?
We are the first company in South Africa to deliver that kind of solution on a fixed location basis, full suite telephony using GSM as the transmission protocol. I think it's going to become the norm in terms of delivering the last mile to a fixed location, and I think it is going to completely substitute copper cables. It is not a big consumer of data. So to make a telephone call, you need throughput or speeds of 32 kilobits per second to be able to pass the voice message on, which means that we can sit behind the technology curve. So we can sit at the last layer of the technology stack, and that's what makes our business so attractive. FST is just simply a telephone line. To use a single geographic number as a calling name presentation, and anyone calling that number will be routed to a mobile network operator that controls that number. But underlying that number are a whole range of telephone lines, physical layers, but wireless, instead of copper. And the beauty about GSM is we don't have to establish a network to be able to deliver that to our customers, because the mobile network operators have built towers and transmission to satisfy consumer needs. So all we do is we piggyback off that. And the beauty is, as the mobile network operators move up the technology curve from 2G to 3G to 4G to LTE, we are provided with access to spare capacity on the older technologies. And if there's excess capacity on the older technologies, you get that excess capacity at a very, very low price, which means we can deliver telephony solutions to the small, medium enterprise customer at substantially reduced prices.
You had some technological setbacks this year, and it hasn't fully been taken to market yet. How far along are you in resolving those, and when do you expect to fully take it to market?
FST, from a technology's perspective, has now been proven. We were initially faced with significant challenges. We were engaging with a single operator. There are now other operators able to do exactly the same thing. What one obviously has to do is secure the commercial arrangements to be able to deliver that. And I think it's, it's public knowledge that we've had a little bit of a debate with one of our suppliers. We do believe we will resolve that.
Would that be the dispute with Cell C?
Yes, we made significant commitments to our supplier in the first 18 months of supply, where we made significant advance payments for future services. Where we are now from a contractual perspective is that we have an accrued right of advance payments, and for the next 12 months we have the luxury of not having to shell out any more cash. So huge telecom in particular, but huge group, will become even more cash positive in the next 12 months. And then we will look to secure arrangements where we're not making those kind of significant commitments up front and in advance.
You've been able to declare a dividend this year for the first time since 2015. What has Huge done in the past year that has enabled this?
Where you are building a company and you are investing in things like working capital, and particularly inventory, then there's less cash to distribute. We have now been able to solve that for our shareholders, and the dividend is not cast in stone. But next year, if we are cash generative, we do have excess cash, we'll look to distribute that to our shareholders. We believe our shareholders should share on an ongoing basis in the rewards of our effort.
You've done a broad-based Black Economic Empowerment transaction in the last year. Can you provide more details on that and how both parties are going to benefit from that in the long term?
Our view as a board is transformation is critical. But one has to do transformation in a sensible manner. And I think what we've done in the two transactions, broad-based Black Economic Empowerment transactions that we have done, we've done sensibly economic transactions, and we've reduced our shareholding in two of our wholly owned subsidiary companies, and those subsidiary companies play various roles in our bigger group in delivering product and services both to our group and to third parties. And so we will capacitate those entities and help grow those entities with our new partner. And so we think those transactions will add significant value both to ourselves and to the BE partner.